Hello, everyone. Welcome to our webinar today. We are going to cover key functionalities, scorers, screeners, scanners to help you generate the best stock pick for you. So we are going to maybe wait a minute for people to join. And yep, I can see people logging in. So first, you can just launch the platform and you arrive on this main page. You have the ability to look at the macro picture of what the market's doing all around the world, and the trend, the change over 1 day, 5 day, 20 day, 1 year, some market news. Then you can look at the sectors that you can see here. So the various US sectors, you can see them on the chart, and you can see them normalized into one single view. So by just moving your mouse, you can see the performance of each of the sector. And then right after this, you have the stock scanners. So the stock scanners is what we're going to talk about today. So the stock scanners are quick ways for you to have a look at stocks that are in a specific configuration. So we've put a few keywords here. So we have the fundamental piece, and then you have the price action piece. So if you focus more on price configuration or chart configuration, you would look at this side, or fundamental, you look at this one. We also have those drop-down menus, which would have basically all of them. So they're all similar in a sense. It's the same thing, but just to organize things. On the left, you'll have the fundamentals. So I can look at basically stocks that are accelerating or decelerating, or GARP, growth at original price, or value plays, or income best. You can also filter by liquid US or large caps, small caps, ETF, or all stocks. So if I go liquid US, value plays, hopefully I get a few income best, Wall Street favorites, and so on. So we're going to go over some of these. Some are really, really powerful. Some are just simple and used by many people, but others are just really different. So first, let's go into the price action ones. You would find the most up and most down. So this is fairly simple and nothing out of the ordinary here. So this is the most up since the last close. So if it closed 10 minutes ago, this is what moved from 10 minutes ago. This is the most up here. The most up close to close, so meaning from yesterday's close to today's close, that would be the most up close to close, or most down close to close. Okay, so very quickly, I can click on any of these names. Here I get a quote and a chart, or inside the quote, there's also two charts. I can enlarge that quote very easily by clicking on this icon, focus, and then I have the two charts, price action, key data points, the balance sheet, some news, peer analysis. I can see peer multiples and so on, and I can close it down quickly. If I want to have a full chart, I click here, and then I have a full chart with the ability to add indicators and our very famous EM model and power days. You can add on the chart straight away. So you can see the positive power days and negative ones. So really useful there. Or you can look at the RMR, relative market rank, that you can see there. Right. So here dropping, this stock is dropping a lot, obviously. So I'm going to close this one down. So we can have the most up, most down, like I just mentioned, since the close. Then you have the up volume. So it's basically stocks that is up on big volume. So I can go liquid US again, up volume. So that would be the name. Adobe would be one here, up on volume, up 4.27%. So this is the intraday. This is the intraday, the 5-minute intraday. So see, Adobe went from 350 to 364. So that's about 4.27%. They just announced their results a few minutes ago. Apps Go here, plus 175, right? So quickly I can get to stocks that are interesting. So on up volume or on down volume. So big down move and big volume. So this volume ratio column here shows zeros, but it's just because it's decimals and the volume is very thin outside market hours. During market hours, this volume will increment all the way to 100%. Or more, or 200% or 300%. If it's 300%, it's 3 times its normal volume. Or if it's 100%, it's 1 time its normal volume. So if you see at 10:30 something that's already 150%, that means at 10:30, just within an hour, it's done about 1.5 times its full daily volume. The other ones are new highs and new lows. So classic new highs and new lows on stocks. So this one is making a new high. So it's all sorted by the most impressive highs here. Some of the company are just merging. UI 205%. Okay, so we get good names here, and you see very quickly within a few clicks, I get all those ideas for me to investigate further. And then I got positive power days. So here, this is I think maybe a time where I really spent a few seconds talking about the power days. So you have the full knowledge lab here and the webinar session, but the knowledge lab will get you here, which is a help page that will explain all of the items that you would want to know here. So power days is one. So we have a full explanation of what the power day is. So what we do on the chart is we take the price and the value traded for the day and the volume traded for the day. And then we quantify how many standard deviation these represent, these two variables. So you see those big histograms that could be 1 or 2 or 3 or 7 standard deviation up or down. When it's a major standard deviation down, it's a negative signal, but then right after you get positive signal, that creates a positive green period for this. And you have a little P on the chart that tells you that is going to lead to a trend. So it's really the battle between bears and bulls, and most of the time they go in groups. So see those 4 P's and 2 red P's and 3 green P's. They're all fighting with each other, and then in the end, it's the green that won this battle. But then this one got won by we had 1 green here and a lot of red, and that's heading and leading to a major decline. So you can read about this. It's a very famous anomaly called abnormal trading volume, and based on papers from the 60s or more recent ones. So it's been around, but not really talked about. So we created our own indicator based on these findings. This is truly unique objects that you can find elsewhere. So what you get there is a power positive breakout. So here I have most of the liquid stocks, and then what I do is I can look at the price change for the day, and this is the power day score. So it's basically how many standard deviation this thing is actually moving a lot today. So you can click on any of those names here, and let's pick this one and see if we get some interesting configuration. We do. So what we have here, we have 4 green P's, of which this one was the first that lead to an uptrend. Started here. So first here, negative trend all the way down, all the way to here, then positive trend, and then negative all the way to here, and then positive, right? So you see the P's here. This is 325 standard deviation, this is 1.2, and so on. So this is very, very useful to quickly sift through a list of names and find names that are jumping and breaking out. So let's pick another example here. Yeah, so we get big rally and breakout. So what we can do is have a look at the top 500. We can see who's breaking out today from the top 500 names. So we get Tesla breaking out. So this is a very powerful way to find out the breakouts. So see how this is kind of breaking out the high. So this couples with, if you couple it with the distance to high, you get a pretty powerful metric. So this is positive power days and negative power days. And maybe there's a little less candidate. You can go into liquid US. So we got more names here, down a lot significantly. So let's pick an example here, ACTV auction. Yeah, and so this is definitely a major power day, -1. Okay, so this is it. And then we have the downward sloping trend. So this is a very interesting analytics. What it does, it tries to find stock that are in an upward configuration, but for a long time. And this has been trending for 25 days, 20 days, 19 days. So CY, we can see, has been trending up for about 18 days. It's in an uptrend. And obviously it went up 73% in the last 20 days. So very good chart configuration. So the way we identify these is we analyze the slope of the trend. So if it's flat or if it's if it's completely flat or if it's pointing upward at a certain slope rate, then we define this, and then we can really get names that are in that configuration. So Zumiez here as well is one of them, pointing upward. And we can do the opposite, downward sloping trend. I can pick on this one. So these has been stocks that have been constantly down for 10 days or 9 days, or it's kind of more difficult to identify there because usually stocks drop tremendously for a few days, but not and then in an extended period of time. But we have a few names here where the drop has been a straight line. So again, very useful filter. Now, the other things that we can look at is the fundamental piece. So we can focus first on high growth. So stocks that have several 100% growth in both earning per share and estimates, right? So we have the estimates growth for the next 4 quarters. We have the growth from the previous quarter to last year and the current quarter from last year. So we can see it was 50% the previous quarter. Now it's 700%, and it's expected to grow another 133. So these are supposed to be high growth stocks, and it shows on their names, on their fundamentals. And we can see SoFi here is one, WGS is one. Okay. So these stocks usually achieve a good EM score, and I'll talk about it. The earning momentum is the cornerstone of the system. It's one of our model, and it's proprietary and gives you a very good indication very quickly of the strength of a stock. So high growth is very important. Accelerating and decelerating. So this is all about acceleration. So it's the change from one quarter to the next. So what you can do is you can go into the earnings analysis and have a look at the growth, which is, this is the actual earning per share produced by the company. Make it a little bit bigger. So this is 0.5. Last year was minus 11. That's a 554% increase, which is a 369 acceleration. It's been accelerating in every quarter except the previous one. So it's a very nice growth, of course. And then we can have a look at other names. So, for example, 1,000% here, and the sales are accelerating at a 49%, 39% growth. So let's have a look. So we have big earning per share acceleration and growth. And we switch to sales, and we have big sales growth and acceleration. So again, very important sales and acceleration. Okay, we carry on with more names, maybe, but let's focus on deceleration now. Of course, it's the opposite. So, I'm not going to spend too much time on this. It really stock decelerating drastically, and hence the stock is dropping. Growth at a reasonable price. So those are stocks with specific PEG ratio, revenue growth still decent, but also some earning yield. So you want companies that are paying you, but still have some growth, and that are fairly affordable. So we have the PEG trailing 12 months, but we also have the PEG for the forecasted 12 months. So for the next 12 months. So this is also available. Lululemon is another one, right? So of course, the growth is not always at its maximum, I would say, but you getting a good earning yield, and PEG is fairly affordable. So, I mean, this is really if you're into growth or at a reasonable price or value plays, right? So here we're looking more at price to book, price to sales, and earning ratio with low risk. So low, price to sales ratio, low PE, and so names that could be value and stable. So that's not much candidate there, but we can always refine. We'll see in the screener how we can refine this. Income best. So that would be stocks with the best yield, best dividend yield, market cap, for you to have a sense of how big they are, and P ratio, so how expensive they are. But TGG, for example, dividend yield of 12, P ratio is 37. We see a major drop there recently. I think they just paid dividend of $50. Yeah, I mean, decent yield, and quite affordable P ratio. Wall Street favorites are stocks that are recommended by Wall Street analysts, and with good revision. So the score is between 1 to 5, 1 being the best. So it's basically a strong buy, and 5 being sell, like a strong sell. So the 1.25 here would be a very good score, 1.4. In general, I think that's 2 or above is very, very good. And on top of that, we have the revision score. So I will spend 2 seconds on explaining what the revision score is. So the revision score is basically for every stock you have these earning estimates and sales estimates that they produce for every quarter going forward. Okay, so I'm going to look at the value here. So I can see all those earning estimates 30 days ago, 90 days ago, for the next quarter or year or so. So these are changing over time. See 197, and a few days ago was 1.84. And these are changing or getting better or worse, and we can track them on the chart. So the revision score actually helps you have just one line to see where that trend is going. Is it going up? Is it going down? And therefore, is it pushing the price up or not? So it's basically Wall Street analysts revising their estimates upward to follow the price, right? I mean, not to follow the price, to just giving their opinion on the stock, and then the price will follow or not. But, you know, at least you can see what Wall Street estimates is about. So here you have the ability to see for 90 days ago, what was the change of that revision score? It went up 248%. Sorry. It was 90 days ago here, and this is the from the earning day. So here we have the same thing from the earning day or 90 days ago. So we can pick up another stock, and we can see the revision score at the last earning point since then. That's 34% up, and over 90-day it was 45%. The sales estimates was up 69%, and the 90-day was up 279%. The second data set that we have is from a different provider, which kind of paints a similar picture with a positive upward slope for the revision score of both earnings per share and sales. And therefore, you have stocks that are not only strong buys or buys, but also revised positively by Wall Street analysts. So I can click on run here, and I can see on the chart how it's been faring over time. So I am going to remove this OMR here. And I am going to insert the revision score so that you can see it. There you go. Let me remove the model here, time momentum. Okay, so now you can see the revision score over time, green line for earnings per share, and sales at the bottom. So sales have been kind of flattish, maybe up a little bit, but earnings per share has been going up. So this is good. And yeah, that's why we have a very good revision score here, and it's kind of Wall Street favorites because they've been revised positively constantly since their earning day. Look at this nice earning estimates curve, upward and upward. Consequently, the stock price has been going higher, right? So very good to spot winners. Price target raised. So this is how many time a price target has been raised for a stock. So here we can see MongoDB has been raised 8 times in the last 7 days, which is insane. Target is 318 on the mean side. We can find the high on the screener. We have the data on the screener. And the the price is already up there and pushing higher. CRDO, yep, same thing. We get nice revision estimates. Price is up. It's been revised 8 times, basically several times every day. And you get 7 days. You get good names here: AVGO, FFIV. Price revised up several times this last week, and it does show on the chart as a consequence. Revision winners. So this is taking both revision score, earnings per share, and sales, and really filtering on those two, filtering for the best revision score estimate. So we've seen some of the names, but with positive estimates revision for sales and earnings per share. So sometimes the price doesn't follow suit, as you can see here, but the revision is pushed up definitely. So it's just maybe chart configuration. So you see that the negative power day here is telling you that it will go down, and it does go down. And here it's telling you that it will go up, and it does go up. So the power days is really powerful there. Going back to this, revision winners is really one of the favorite. Great revision shows on the price, XCRS. Great revision shows on the price. Again, finding winners is easy here. Relative strength is all about the RMR. So again, all those model relative market rank are on the Knowledge Lab. And here I can go into relative market rank. So what we're doing on the relative market rank is the equivalent of the relative strength. We look at the 1 month, 3 months, 6 months, 12 months. And then we create a composite, which has a combination of the 1, 3, 6, and 12. And then we have the ability on the chart to paint a picture of it. So a picture of all 4 variables, the lighter being the closest, so the 1 month, and the darker is the 1 year. So this is basically comparing the performance of your 1 month's performance with all 4,000 or 5,000 stocks in the database and seeing which one's the best. I got a question. Is it fair to assume that if the revision score is going up for earnings, but sales revisions are flat, the company must be improving its margin by buying back stocks, moving, getting more efficient via AFE efficiency? If so, how would I find news on that? Yes, of course. So if you're in a configuration where the revision score is going higher up here and the sales revision score is not, and you want to find out what's really happening or what is specifically happening for the company, you just switch to news here. So you have the news panel here, and you can read what's an important news for the stocks. If the news is positive, we just put like a plus or minus if we have really positive, significant news. It doesn't look like we have much there. There it is. So if we double plus, you have very positive news here, and you can see what has been happening to the stock. You can read the news. There's actually 4 sets of news that have been summarized into a one-liner for you to quickly read. And you can, so it looks like there's the earning beat and with guidance disappoint. So you can read about it, but yes, of course. So news will illustrate the whys and the how and the when of things that you would see on the chart, of course. So for positive news, just 1 plus or double plus, if there is any, or negative news, 1 negative or double negative, if there is any. And then you have the negative news, recent negative news on the stock. If you want all news on all stocks, you just filter here, and then you have all the positive and negative. You can also filter by sector and by topic. So if you want everything about earnings, you would go into earnings and analyst views and click apply. And you have all the stocks that are relevant here in earnings and analyst news. So yeah, this is very powerful, of course. Thank you for the question, Mark. Okay, so we did the relative strength explanation, but what is it? So on the chart, I just want to paint it very quickly. So we will remove these 2 and go and pick the RMR slope, so relative market rank. So really a ranking from, sorry, wrong one, this one, relative market rank. So it's a score, it's a rank, it's not a score, it's a rank from 0 to 100, and 100 being the best, 0 being the worst, and it's ranking all the stocks against the database. So all the US stocks against, 1 US stocks against all the others. So if you're 100% here, that means your performance for the 1 month, 3 months, 6 months, 1 year is better than 100% of the stocks. They're better than all the stocks. If it's 76, you're better than 76% of all the stocks in the database. So you're good. It's definitely been better lately, but still not the perfect picture compared to guys that have been going up and up and up on a regular basis. So we have the RMR rank here, and so 95, 88. We can see here an 82. But again, there are some stocks that are more high up there and have better chart configuration than this UTHR. Right. But it helps you focus your energy on really stocks that have been bought by major institutions or even retail investors, because the more they bought, the more the price goes up, the more the relative market rank is pushed up. Relative weakness. So here we're focusing on the RMR that is deteriorating. So we're looking at the slope of the RMR. So we want to see the downward slope here. So this is what we're focusing on. It used to be a top-notch stock there, and then recently it's dropped so much, almost 50%, that it underperforms the almost 80%, 85% of all the stocks. Same thing, another one here, Momo, going down significantly. Now, the special cases, 4 cases that we have are for the models that we've developed that are really powerful. So, for example, the earning momentum, timing momentum, updrift, or post-earning and spin drift in power days. So the earning momentum is a cornerstone of our model and system. It's the EM score that you see on all of these charts here. And I'm going to make it a little bit bigger. There you go. Close that. So if you look at that EM score, sorry. If you look at that EM score, you have an EM that fluctuates, that goes from plus 50 to minus 50. That EM score, when it's positive, is always a good sign, and it's better than negative, of course. When it's greater than 10, it's great. When it's greater than 20, it's absolutely extraordinary, and above, it's unique stock. So these stocks have been starting to have negative score, -7 and -10, and all of a sudden they went to 21, 19, 28, 18, 21, 9, and so on. So really good score that pushed the stock higher from $13 to $32, so it doubled. So this is what the earning momentum score gives you. The quick way to filter out or to find out stocks that are outperforming or, from their balance sheet are making really impressive headway. So if I click on the stock for the earning analysis, this is what the EM is based on. So you have the EM score at the bottom here for every quarter. This is the last quarter and the last number that's been published. This is earning per share. This is sales. So the EM takes earning per share, sales, profit margin, and free cash flow, and compute the growth and the acceleration of all 4 of these variables and attribute scores or point to each of these variables to come up with a final score between -50 and +50, which you see on the chart here. Actually, when you hover your mouse on it, you have the change on that specific quarter, and you can see at what level it is. We also have the revision score here, the revision estimates as well, and the price change. So it lets you see which stock is in an interesting configuration. Sienna, recently, of course, is a very good example. So here we have an interesting configuration, and something I always say to our clients is the following. If I look at the earning per share estimates, and I plot it on the chart, I can see that recently that estimates has been turning around, and the stock as well. from EM19 to EM29. So not only the estimates shoot up, but you also have the actual numbers. So the numbers looking backward, looking at the past, showing a great picture. So you have an acceleration of 35% in earnings per share. It was accelerating as well the previous quarter. It's actually accelerated 4 quarters in a row, which was an interesting play here. And 91% growth, so really great picture here for Sienna. So really the EM helps you quickly really focus your time on the stocks that are truly outstanding, really saving you time, which I think is the most precious thing you can get. And yeah, so this is the earning momentum. The timing momentum is what you might have seen on the chart at the bottom. It's a signal where you summarize a set of analysis or signals, and I am going to run one here on. Let's pull up top 500. Yeah, Datadog, for example. So here we have the power days, the price momentum slope. We have the trend. The trend is up. The price momentum is heading upward. The power days positive, and the price change for the last 5 days has been positive as well. So it's all rosy and positive going forward. So the timing momentum is the following. It's a set of analytics that you can display at the bottom of the chart that really gives you a simple picture of a green and red picture of whether the stock is in a positive trend or not. So I can see, these 3 starts getting green here. The 4th is not, and here the 5th one is all getting green, and now I have a green period. With the price momentum start pointing some red dots here, and then the power days is pointing negatively, and it does, predict a downturn that is corrected by this level here. So what do we have here? We have the 2050 EMA moving average, exponential moving average. We have the power days, which we explained. We have the RMR slope, so it's a direction of the RMR, the relative market rank. We have the price momentum, so it's a very short price momentum shape of the price. So this one is a little bit erratic. You see it goes green and red and so on. And then you have the trend indicator. This is similar to Keltner bands, where it will tell you whether it's in an uptrend or in a flat or not. But very quickly you get a visual cue that tells you if you're onto something or not. So Palo Alto Network. And there you go. You will have all green period, 3 greens and a yellow and a red, and then 4 greens and a red. So on that day, you have about everything is pointing green except the moving averages, and then it starts heading upward. You make it basically 10% growth here within 20 days, and it's showing green. So something really, really important to get a good timing, hence the name timing momentum. And the drift, which is our forecasting tool. So the drift will basically tell you where the price is going in the next 90 days. So it's statistically driven. So it's 198 now. It will go between 200 and 162. That has a 66% probably to get in there. Accuracy, I would say, based on 5 out of 20 samples. We can go into 40 samples, so 40 quarters. Obviously, the range is wider, but still the price is in there. And it tells you a lot of things. You can add the standard deviations, so it helps you see where the price is eventually going. So if I go into 20 quarters, I can see the standard deviation. So if you trade options or stock, so we'll spend more time on this when we have time, but today I really want to focus on the on those stock scanners. Now, how can I go beyond those stock scanners? So say upward sloping trend, I want to add to this. You go into the screener and the scanners are here. So they're regrouped into categories. So if I want to focus on price action and how they positive breakout, and then the universe, liquid US, and I can carry on filtering on whatever I want. So say instead of liquid US, I want top 500 names. So WBD here, positive. Obviously, this is showing up very nicely. But what I can do is I can do this, and I can add, for example, earning momentum. Earning momentum, and here I want a positive earning momentum of say 5. I'll add it as a criteria. So now the criteria is here. Oh, wow. So that's quite stringent. Let me just expand and have a little bit more names here. Okay, 60 names. So now we have 60 names that are in upward configuration very strongly and with a good EM. So let me refine here and go into price action, upsloping, uptrending. Okay. So let's see this. We are going to do the same thing. Earning momentum, say 5, add, right. So now we have how many stocks? 32, and I can click on a light here. I can see really upward price action, great EM, EMBA, upward price action, Google, same thing, straight line up. This is how many days it's been trending, 6, 7, 10, 12, 18 days, CyberArk, that's the one we saw earlier. Really beautiful trend. You can save on this screener. I can call it uptrend, and I click on save here. It is saved, and you can use it. You can take any of these stocks, right click on it, and add it to one of the monitors that you have. So the monitors are here, and you can save the name you want there, or go back to your screener and pick the names you want, CRDO, add to monitor, gradient, and then see it in the monitor. Okay, so I hope this was interesting. Again, our goal is really to give you access to the best stocks as very quickly. I get a question from Jason on the EMA signal 2050. Does that mean the 20-day is above the 50? Yes, exactly. So what we do have is this. So let me go into there. So EMA 2050. Actually, you know what? Let me make it a bigger screen here. Right. So the EMA 2050 is the bottom line. Yes, it is one of the most stable indicator because it basically gives you the big strokes. You know, down, you can see down here, and then upward, and then down and upward. So it's really not shifting too much over time. You can add those studies in there. You click on studies and you type EMA, and you can add 1 and 2 and just basically change settings. Then you change 20 days. Maybe you change the style, you put it in yellow, okay. And then you pick the other one and settings, and then you put 50 days, right? That's it. So yeah, what we can see is here, the yellow 20 days goes below the blue, so when red, and then it tend to go above, so it's green, and then just 1 day off, and then that's it, it's above. So I hope Yeah, so Phil, question from Phil. Are we going to use AI in our analysis? Yes, we are. I am going to show you briefly a preview. This is what we are preparing for you guys. So I think that will be interesting. We will have the ability to have this type of analysis where you can look at the last earning call. You can look at the earning transcript, so the full transcript of the last earning call, but then summarizing it into various topics. So risk and challenges, guidance, product line and market pressures, strategic initiatives, and you can switch from one topic to the next. So first off, for BAC or NVIDIA, if you want to see the strategic initiative, I can read it straight away there. If I want to look at risk and challenges, these are the major risks and challenges that the company is facing. And the analyst concerns, so basically the questions from analysts, the new concern that are showing up this quarter compared to others, and also the concentration of issues or growing concerns. So all summarized very nicely here, so you don't have to read the entire call. But we'll also have a quick summary of the latest filing with activity of the company, main product, growth prospects, and risk and threat. So really a summary of what's out there in the investor report, for example. So this is coming up and will help you do your research on every company. So any stock I type, so for example, NVIDIA, I will get this data populated. And that helps you get real great content, reading about the company, reading about their products, reading about the competitors, and see if it's possibly one of your investment or something one stock you can invest in. All right, I didn't want to go any more than 45 minutes. I hope it was useful. Let me know if you have one or two last questions. When is it going to be released? Pretty soon, maybe in a week. We are going to have the AI analysis out. So yes, very, very soon. Any other questions? Thank you very much for your attention. I hope it was useful. And you can use the platform, save your screeners. So stock scanners are great to start with very quickly, and then you can save your screeners when needed, and you can modify your screeners at will, really, and save them. All right. Well, thank you very much for your time, and we are doing another webinar tomorrow and more live session as well going forward. So listen to us. Look at your emails, the emails that we sent out, and I hope it was useful. And have a good use of the platform. And don't forget to do your own research. Thank you very much for your time.